This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, June 13th, 2016. Euro dollar. So this latest topside failure in the euro up towards some medium-term internal resistance towards 115 does put the pressure back on the downside, with the focus now on a retest of those recent lows at 110.98. A break below 110.98 will strengthen the bearish outlook and accelerate declines back down towards the 108 area. At this point, it would take a break back above that recent high from the previous week at 114.16 to force a shift back to the top side and a focus on a retest of the 2016 high at 116.17 further up. Sterling dollar. So cable continues with its downside pressure after taking out some critical support in the previous week at 143.33, and this now sets the stage for a potential resumption of declines back down towards next key support at 140.05, which guards against that yearly and 7-year low at 138.36 further down. At this point, any rally should be very well capped up towards the 144 area, with only a break ultimately back above 145 to really shift the focus back to the top side and for a potential retest of those critical highs at 147.70. Dollar yen. So dollar yen is under pressure into the new week, and the market is now focused on a retest and break below that previous May 2016 multi-month low at 105.55. A break below that level will set the stage for the next major downside extension, potentially exposing a drop back down towards 100 in the days ahead. At this point, rally should be very well capped towards the 108.50 area, with ultimately only a break back above 111.89, that previous lower top, to compromise the bearish structure. Euro Swiss. So Euro Swiss has come back under pressure in recent trade, with the market now potentially seen retesting recent support, key medium-term support around the 108 area. A break and close below 108 would be a significant development and could open the door for an acceleration of declines, while inability to take out 108 or establish a daily close below 108 will open the door for another bounce in this market as a broader range takes form and potentially exposing a fresh upside back towards recent range highs in the 112 area. Aussie dollar. So Aussie rally stalled out last week above 75, and this latest rally could be the end of a correction, which puts the pressure back on the downside. A break back below 71.45 would confirm this outlook and accelerate declines back towards a retest of the 2016 base at 68.27. There is some resistance if that 75.04 high from the previous week is taken out in the form of the 61.8% fib retracement off the 2016 high to 71.45 move, which comes in at 75.70. So any rally should really continue to be very well capped ahead of fresh downside in Aussie dollar. Dollar CAD. So dollar CAD had seen some intense pullbacks in the previous week over the past several days, but those pullbacks have been supported, and this supports the case that the market is putting in a more meaningful material base by those lows from 2016 at 24.61, with a potential higher low now sought out by that weekly low last week at 26.55 ahead of the next major upside extension, which will be confirmed on a break above 31.89 and expose a move towards the 135 to 140 area. A break back below 126.55, that low from last week, would however negate and expose a direct retest of those recent 2016 lows at 24.61. Kiwi dollar. So Kiwi has seen some gains stall out in recent trade after the market surged up above the previous 2016 peak in the 70 towards 71, trading rallying all the way up to those highs last week that we saw at 71.48. At this point, though, with daily studies having traded into overbought territory and the market into some previous critical support turn resistance, there is risk for this rally to stall out ahead of fresh downside. Ultimately, though, a break back below recent lows around the 68.93 area would be required to officially put the pressure back on the downside. SPX 500. So the S&P 500 has once again shown signs of stalling out after rallying above 2100. The market pushed to a fresh 2016 high in the previous week at 2121, but stalled out above 2100 again and shy of that record high at 2133. There is the potential for a major top in this market, though that wouldn't be confirmed unless the market broke back below some critical support lower down around the 2020 area. For now, a daily close below 2085 would do a good job of taking the immediate pressure off the top side. Gold. So gold continues to be very well supported on dips with that setback from the other week. Once again, propped into the 1200 area ahead of this latest impressive bounce back towards 1300. Expect these gains to continue with a break above the 2015 peak at 1307 to accelerate gains towards 1400 further up. Ultimately, any setback should continue to be very well supported, with only a break back below 1190 to compromise this constructive outlook for gold.